Which screen of mine can you see, Kendra? Can you see the big screen? Can't hear you. I can't hear you.
Yeah, I see the big screen. You're good.
Normally, you don't see my dual monitor with the
Just
project.
the Montana Child Care Business Connect.
All right, cool. All right, I've got one after yeah, 131. Let's go ahead and get started. Thank you everybody for joining us today. As you come into the room, please be reminded your name, your organization, and your provider number, please, so we can be sure to get you ECP credit. Let's go ahead and get started. First of all, thank you again for joining us. This is our third phase of Tiny Trainings, our 30-minute webinar series. We launched, I guess, what was it, late last year, and then took a break for the summer, and here we are back with what we're calling the Q&A series, and we're starting with banking and lending professionals. Again, phase 3 of this training, as a reminder for those of you who may not know, or those who do, Kendra, myself, and our colleague Haida Borganova, who's also on the call, work for a program called Montana Child Care Business Connect, which is a program of 0 to 5 Montana, a statewide child care advocacy and technical assistance organization. We are under contract with the Montana Small Business Development Centers at the Montana Department of Commerce to provide business technical assistance and training, and we're funded in part through a contract with the Department of Public Health and Human Services. I had this problem last night. There we go. So what is the Tiny Training Series? Just a scene setter a little bit here. We do 30-minute webinars every other Thursday at 1:30. 1:30 is nap time, so we put it there very specifically. And for those of you childcare providers who are participating, attendance at 4 of these next 6 will equal 2 hours of ECP credit for you. This in particular, this series, the Q&A series with the Bail team, business experts, subject matter experts, we really want for you to increase engagement with these people and access their knowledge. Today, we're talking to a banker, a lender. In 2 weeks, we'll talk to an accountant, followed by insurance and risk management professionals, followed by legal lawyers, human resources, licensors, and R&Rs. We'll round it out in mid-December. Again, our goals for the question and answer series are really to encourage and empower increasing quality of relationships between you and the external team. We want to increase your access to their expertise and improve your knowledge about what they have to offer for you. Before we get into our conversation today, what is Child Care Business Connect? We were launched in 2022. We received American Rescue Plan funds through the Child Care Innovation program through DPHHS. And we were tasked with supporting communities and entrepreneurs with business elements, business stuff about starting, owning, operating, and being sustainable in your childcare program. We do that in 5 critical ways. 1, we do trainings like this. 2, we provide free one-on-one technical assistance. 3, we have a mentorship program for early stage startups. Our 4th element is community capacity building. So we work with communities to support the growth and stabilization of childcare at the economic and workforce level. And then we also have a website chock full of stuff like this and other tools and resources. Our program is staffed by our director, Rhonda Schwenke. Myself and Kendra Edlin, who's on the call, provide one-on-one business technical assistance. Haida manages our outreach and communications. Shelby and Alex do our business and community outreach. Jennifer Owen has helped us design this program, as well as manages our mentorship program. And then Richard supports the rest of everybody else and the work we do. My name is Jason Nitschke. I'm our Senior Childcare Business Advisor, and really my role as a business advisor is to help you turn your ideas and visions into some degree of reality. I typically share my resume as an example to highlight you do not have to be classically academically trained in business to be an excellent entrepreneur. We can teach and train you those things. I've owned and operated 2 businesses myself, and I've been in the economic development world for a long time. And most of my experience is outside of the classroom. I do not have academic credentials at the university level in business management or operations or entrepreneurship. I've done it on the ground, and I've taught a lot of people how to be successful entrepreneurs. Our panelist today is Bob Gieske, Vice President and Senior Business Banker at Valley Bank Valley Bank, a division of Glacier Bank in Helena. Bob's been with Glacier Bank, the organization, for a couple of years now, and is currently Vice President, Senior Business Banker for Valley Bank of Helena. Over the last 15 years, he's served in various commercial banking and relationship management roles. Most recently, he was a Senior Vice President and the commercial team lead at Rocky Mountain Bank, leading commercial business banking teams in Billings, Bozeman, and Kalispell. He has extensive business background with a variety of experience ranging from community banking, commercial sales, credit management, high-tech CRM software, solution sales, and commercial real estate development and brokerage. Bob's from Minnesota, is a graduate of MSU, has a degree in business marketing and management, and he is now a 22-year resident of Montana. And I read today that more than half of the population of Montana were not born and raised here, which is an interesting data point. We're going to talk to you about two things today, and I would encourage you to prepare your questions. If you have questions, we will give you an opportunity to ask them directly of Bob, but we really want to have two primary themes that percolate from this today. Number one, I mentioned this before, we want to improve your relationships. Number two, we want to validate your business activity. We want you to stop commingling your personal and your professional. We want you to stop commingling. So with that being said, I'm going to stop share, put Bob on camera. Bob, you can see and hear and all of that good stuff?
I can, yes. Good afternoon.
Good deal. I got to get to my questions now. So let's just start, Bob, with what are the most frequently asked questions as a banker that you receive from business owners?
Well, thanks, Jason. And first of all, thank you for having me here today, and thank all of you for showing up. And I would encourage questions. Definitely right now, the first question is, what are interest rates doing? But everybody's got that question. Interest rates have changed quite a bit. But definitely when it comes to financing, a lot of what we do is financing. I'm a banker. I do lending, but I also help out with deposit accounts. And so, one of the main questions is, what do you need? What do you need from us to approve us for financing? And so we can talk a little bit about that. I would say to be prepared in advance. If you're going to meet with a banker, but you want to bring financial information, you want to have up-to-date financial information. Keeping track of your books is super important. And I'm sure when you get to some of these future sessions with the accountants involved, they'll tell you the same thing. They want accuracy. Bankers look for that as well. So, I would say, just in general, to be organized. Have your information put together. If you've created an entity for your business, organizational documents, the tax ID information, obviously your personal information, your photo ID, things like that, if you're going to open accounts or have financing. But definitely financial statements is going to be key.
What do you think business owners need to know about improving their relationships with banks and credit union partners?
Well, what do we need to know, or what do business owners need to know? I would say not only improving your relationships, but having a relationship. Do you know who your banker is? Do you have a banker? I think we live in an online society. Everything's done online. You can do anything online. You can even do all your banking online. But when it comes to a financing need, especially business financing, it's different from a home loan. It's different from a car loan. It's more involved, and your banker wants to understand your business, understand your strategy, understand where you've come from and where you're going. And so, it's really hard to do online. You have to be able to sit down and talk through the operation, talk through some of the challenges, talk through what you've learned, and really paint that picture, or share the share the vision of the strategy. So that has to be done in person. And if you don't even know who your banker is, that's really hard to do. So wherever you bank, find out who that business banker is and make it a point to develop a relationship. Whether you need financing right now or not, I would suggest, making that connection so that it's not all new when there is a need.
It sounds like you're saying, think of your engagement with your money partner less transactional and more relational. Is that a fair statement?
Fair statement. And I've learned that over the years. It is not just transactional, it's a relationship. And I've had clients that I've worked with for a long time, even from bank to bank. I've changed banks, as you mentioned, in my background the last couple of years, but those clients I still have the opportunity to work with, and they still call. And it's kind of the remember when we were just starting, and I know their background, and it goes a long way when the banker knows the background and has had the opportunity to work with you over the years. It is a long-term relationship.
I would suspect it's difficult to establish a relationship in a moment of crisis. Is that also a fair statement?
Fair statement, and that kind of ties back to what I said. If you're in a crisis, it may be too late. Well, I shouldn't say it's too late, but you're past that point now. Now there's an immediate need, and I need something now. That's why I'd encourage anybody listening and paying attention to develop a relationship so it's not reactionary and it's more proactive on the business banking.
So let's talk about that commingling conversation that we had before in our prep call last week. Let's talk about the difference between personal, and you referenced this earlier, difference between personal banking products, business banking, daily deposits, lending, commercial, that kind of stuff. Can you talk a little about this difference between personal, professional, all the tools and resources available?
Yeah. And personal accounts or personal loans, they're exactly that. They're going to be in your name personally. And I think we all know, I mean, you can get a car loan, you can get a home loan, you can get a business or a personal account, excuse me. Personal checking, personal savings, you got your personal debit card. But when it comes to the business side, you want to set that up separately and think of it as a separate entity. It's a separate entity. It is an LLC or an S corp, or you've got that legal documentation that creates this separate entity, and that separate entity has its own identity. Essentially, it's got its own tax ID number. Ideally, it's got its own financial track record, if you will. That's the trend of the financials, and you want to set that up separately as its own entity, its own business accounts, business checking, business savings. Business financing will come into play if there's a need. But when it comes to business accounts, there are a lot of other what I would call bells and whistles. There are services and things that banks can provide that you wouldn't really necessarily have on your personal account. And when you think about payroll, as a daycare provider, or you've got to provide payroll to your employees, and that can all be done electronically through your business account. You wouldn't want to run that through your personal account. But even things like if you've got to put money into the business, you can put money from yourself as an owner of the business into the business entity, and you could track it as a loan, capital contribution, whatever. You can talk about that with the accountants. I'm not an accountant or a CPA, but there are certain ways to track that, and there are certain tax benefits, in and out of, from a personal to a business, or vice versa. So there's a lot of things to really think about when it comes to keeping things separate.
Yeah, I was going to ask you that next follow-up question about the tax benefits of not commingling. Can you elaborate a little bit more on that, knowing that you are not a CPA?
Yeah, again, not a CPA, but I've seen it, and it's a common structure. If in this case, a daycare provider wanted to own their own real estate, I've seen it very commonly structured where there will be a separate real estate holding entity, or even the individual that will buy the real estate and borrow for the real estate and rent it back to the daycare provider. That's the operating entity. that operating entity, that daycare facility will pay rent to the owner. Could be the daycare facility is owned by the same person, right? But you pay rent to the owner. That's expensed out of the daycare operations. So that's lowering the net income, the taxable income of the operation, and paying rent to the individual, right? So you're separating out these two entities that way. Financing, can be structured both ways. You can have financing to the operating company, the daycare. You can have financing to the real estate holding entity, if it's an LLC, or the individual. So keep things separate from a banking perspective, from a financing perspective, and from an accounting perspective. There are benefits when it comes tax time, and we all have to pay the tax man. So keep that in mind.
On the business banking side of things, kind of aside and apart from your daily deposit accounts, typically we talk about a business can gain access to a business credit card, a business line of credit, maybe contract related financing, and then working capital, whether they're term loans or revolving loans. I always make the joke to people who are trying to start, you would never buy a house with a credit card. And yet there is often misalignment of a financing tool with the use of the funds. Do you often see a misalignment of sources of funds with uses of funds?
I do, yes, and that does come up quite often. This example in this industry, there could be a request or a need for a line of credit, for example. Most likely not. There may not be a need necessarily for a line of credit. There could be, and I should say there could be. There may be a gap between when you invoice your clients and when they actually pay. And in the meantime, you've got expenses like payroll and things like that. So there could be a little gap there on a monthly basis where there could be a need for a little bit of short-term financing. But oftentimes we see lines of credit get advanced up and then they just sit there. And we call that, the evergreen. They kind of stay there forever, that balance. It ramps up and never gets paid down. And revolving lines are meant to revolve. And that example with payroll, for example, Jason, is we invoice on the 1st of the month and we expect to be paid by the 15th. And when they stretch out towards the end of the month that we may need to finance that gap, that should be a week or two, not advance up and never get paid down. So revolving lines should revolve down to zero. So, if you think you need a revolving line, think about that very short term, like a credit card. But if you're thinking more that balance is going to advance up, or if it ends up, that's term financing. And there's a need for that too. We call that long-term working capital. It's, we needed that capital to keep the business going at that point in time, but we'll pay back over time. So yeah, there are a lot of misalignments, and definitely I could talk about other industries that happens a lot, inventory with manufacturing companies or whatever. So yeah, it happens across the board.
We're at about 10 minutes left in the call. It goes really quickly. So now would be the time for everybody get prepared to come off mute, raise your hand, type a question into the chat box. Kendra, if you could monitor that just the way my screens are set up. To put a closing thought while everybody's getting prepared to do that. Oh crud, I just lost my train of thought. All right, who's got questions?
Well, let's see. I've got one thought at the end here, so see if we have any other questions.
Who wants to come off and ask a question? It's the whole point. It's in the title of the event, the Q&A series. We're giving you a platform to talk to a banker. Oh, I remember what I was going to say. The time to acquire capital is before you need it, not when you need it. That was what I was going to say. Sorry about that. Okay, who's got a question?
Yeah.
Or Bob, a statement? I don't see anybody with questions. Well, good, because we prepared more. So folks who have questions, please type them in. That is what's going to make this dynamic and unique, and make sure that you get the information that you want out of the subject matter expert. So Bob, I'll just ask a question that I suspect some folks are thinking about. If you're going to if an entrepreneur is going to walk in and say, hey, I need to borrow some money to start, grow, or expand my business, kind of across that spectrum of time, what kind of information does a potential borrower need to provide to someone like you, a credit analyst, underwriter, loan officer, whomever that may be?
Yeah. And I could go through that for sure. I'd say first off, think about your banker. So let's assume you know who your banker is. Just like an attorney or a CPA, call ahead, make an appointment. Try to set something up. My door is always open, but oftentimes it's closed. Today, for example, I'm doing this, or I've had clients in here. So think about that. Make an appointment in advance, and you can ask, if there's anything specific that the bank would want. But the general things kind of goes back to that financial information. Think about 2 or most likely 3 years worth of tax returns, 3 years of financial statements. So that's your company prepared profit and loss statement, balance sheet. Personally, most often the case is, the individual owns the entity, multiple people, but you're going to have to provide a personal financial statement, your own assets outside of the business. Obviously, personal ID and identification, that type of stuff. Organizational documents, if your bank doesn't already have the entity information about the, XYZ daycare LLC or whatever it's called, that entity information. But then also think about, I talked about strategy. What's your business plan? Where is it going? If you've got that prepared, if you came into the bank and you had a 3-ring binder of all that stuff, you're ahead of probably 90% of the people that walk into the bank. And I'd be very impressed. So if you come in prepared like that, you're ahead of the game.
So
Okay,
Anime has a
Bob,
question.
Oh,
Go ahead, Kendra. All
Anime
right.
did pose a question. She said, what if you're just getting started?
Sure, that's a good question. If you're just getting started, so the business plan, this is what I want to do. And it doesn't have to be a 100-page document. And in fact, I personally, I probably won't read 100 pages. Bring in, a couple of pages. Here's what I want to do. Here's the assumptions I'm making. Here's why I think I need to borrow this much if I need a loan. And some data to back that up would be super helpful, and where the assumptions come from. But it's mostly going to be leaning towards your personal capacity, your personal tax returns, your personal financial statement. If you own a home and if you would think about, leveraging your home for a startup business, which is honestly the case quite a bit, you might have to use a home equity line of credit, or at least put a second position on your home. That happens in a lot of cases. Do you know what your home is worth? Do you know how much you owe on it? Those types of things will be part of the discussion. So have those in the back of your mind, but definitely the business plan, the strategy, if you're just getting going. Again, I think it's, we want to see, right? This is the first time as a banker, the first time I'm hearing about it. You've thought about it for a while. So how much time and effort have you put into your plan? How much, information have you put together?
So Sherry has a statement more than anything, but Barb, we talked about this in our prep call last week, or maybe it was yesterday. I can't remember. Sherry says she doesn't really have any specific questions. She's looking for, some current information. She's been in business 25 years and they've just moved, but they're looking forward to retirement. We talked about acquisitions and transfers of ownership. Would you mind making some comments on preparing a company for that?
Yeah, I love this question, and thank you for asking. And I think, Jason, we might have just talked about this yesterday. Succession planning. So succession planning or preparing your business to be sold. Number one, if you want to sell it this year, hopefully you're planning a little further in advance. We were talking about kind of that 3 to 5 year window. You want to be sort of setting your business up to be sold in the next 3 to 5 years. And what that does is that gives you that 3 to 5 years to really fine tune the financials, fine tune the structure, pay down any debt, really get it to its most profitable state. I think if you're selling the business, succession planning is a little different. That's, you want to hand off the business to the next level or something like that. But really, if you're selling the business, I call it profitizing the business. You're really trying to improve the value that you're going to get out of it in the next 3 to 5 years, and that's through financial reporting, financing structure, etc. So it is a forward thinking thing. You don't want to be rushing into that.
So we only have about 3 more minutes left. I have about 58 more questions, maybe 74 that I could ask you. But I asked you this the last time around that we were talking, whether it was yesterday or last week, forgive me. What's the point of collateral? Are banks in the real estate business?
Yeah, no, not really. Collateral is our security blanket. That's how we sleep well at night, knowing that there's something securing it. Think about like your vehicle, right? A bank will lend on your vehicle. If you don't make your payments, they're going to take the vehicle back, and then they're going to sell it, and they're going to try to recoup some of that money that they lent out. Same thing with collateral, right? It's not. The bank's going to lose money on that deal too. Worst case scenario, all the doom and gloom. If we have to take back a piece of real estate, we've got costs. We've got attorney costs. We've got, obviously real estate agent costs. But it's at least something that we can, quote unquote, sink our teeth into if it doesn't work out. But that goes back to the strategy and the discussion and the relationship with the bank. We want to set you up for success on the financing side. We want you to be successful. We want you to pay us back through cash flow, not through giving us your stuff. Like we don't want all that stuff. It's a secondary or tertiary. It's the third way we get repaid in the event of worst case scenarios. So ideally it's cash flow, which is why we put so much effort into the front end. It's why we ask for all your stuff, all your information. We really are looking for cash flow.
Well, I think we're about at time here. Kendra did make a shameless self-promotional plug. There are business advisors out there who can help you prepare for engagement with bankers, prepare your business for liquidation so that when you walk in the door, you are putting your best foot forward. I've been doing this work for a long time. Kendra comes from the credit union and lending world as well. And so if you do have questions about this process, we are happy to step in as well. Bob, any final thoughts in our last minute here before I put a bow on it all?
I think this was great. Thank you for having me today. And again, I would just encourage everyone to reach out to their bank, get to know your banker, develop that relationship. And if there's anything else we can do, reach out to Jason and Kendra here, and we'll go from there. Thank you.
Credit unions and gap and bridge financiers as well. Just a couple of last closing thoughts for everybody. If you'd like to learn more about building your team, entrepreneurship is a team sport. And guess what? We did a training on this, how to utilize business advisors earlier in the spring. The recording is available on our website, childcarebusinessconnect.com. We've also got a one-pager on this as well about what bail teams are, what the advisory teams are for businesses. If you're interested in some follow-up training, the Tiny Training Series continues through the middle of December. You can register through your ECP account. If you're on the eastern side of the state, we've got 2 events coming up next week in Wolf Point and Baker as well. And as I mentioned, all of our recorded content is available through our YouTube page there on our website. Now would be the time that we ask you for your feedback. This is really important for us so that we can customize and be agile related to the stuff that you want to learn more about. If you wouldn't mind, please go ahead and scan this and complete this. But we are at time. And I guess we'll see you in a couple of weeks. I'll leave this up so folks can scan it and get it done on our way out. Bob, thank you very much. Kendra, thank you for organizing this. And thank you everyone for joining us.
Thanks again, Bob. You're the best.
Thank you.